Alright, welcome back to the Crypto Rolly tutorials. In this video we will look at the EMA, EMAs plus the Bollinger Bands. Alright, so let's go to the trading view. If you don't have trading view, I highly suggest you get this. You can get the trial version for free. You really don't need the paid one unless you want some extra stuff like the VPVR or using multiple charts at the same time. Otherwise, just get signed up with TradingView. It is free. Okay, so go to your indicators right up here. In the indicators, you're going to type in 5 EMA, and you're going to look for the 5 EMA plus 4 MAs. Okay, so you click on that. I already have one loaded, so I'm going to get rid of this. So you can see I have that right up here. This is going to be if you want to show it or don't show it. Okay, so you can see them right now here, and this will be the settings. This will close it out. Okay, so we'll go to our settings. In the inputs, these are going to be your inputs here, and you can have your colors. You can select whatever color you like, whatever feels good for you, but you are looking at 5 EMAs and 4 MAs. These are the exponential moving averages, and these are the moving averages. In crypto, I tend to prefer the exponential moving averages, but some of these regular simple moving averages are very important too to have and look at. You know, you can toggle between them if you like. So first of all, I have the 21 EMA, the 50 EMA, the 100 EMA, the 200 EMA, and the 377 EMA. Next, with your simple moving averages, you have the 10 simple, 50 simple, 100 simple, 200 simple. Okay, and if you look at this, I mostly just keep these checked. I don't usually have the 50 or the 100 simple moving averages checked, but in case I want to look for a golden cross or a daily cross on the simple, I can always highlight this and close out these guys and just look at that if I like, or if I'm looking for the 100, I can click on that there. Okay, but when I'm just using my standard settings, this is how I have it. Alright, so that's that basically. And if you look at the weekly, you can see how we're above the weekly 21 EMA. Something that I look for is a candle body close above or below. So that's the body here. This is the wick. Wicks do not count. Wicks can fake you out. So you have to wait for the actual candle close. So if this body closes, and you can see up here, you have your open, the high of the candle, the low of the candle, and then the close of it. So you want to look up here to see your open and close. So if this candle closes, you can see if you hover here, you can see the close is at 88.45 currently, but the candle will close in a few days. If it closes beneath the yellow 21 EMA, you can see it up here. So if you highlight your cursor to the right of it, it'll be the most recent candle. But if you move it above each candle, you'll see a different number coinciding with that candle. Okay, so if you hover above this candle, you can see the yellow 21 EMA is at 87.65. So if we get a close beneath 87.65, that is when you start looking at your next targets. The 50 EMAs at 82.89. Now if we close above it, that will be good to see support, and we could see a bounce here. So when you're above these moving averages, it's support. When you're beneath them, it is resistance. We can look at the daily for another example. So on the daily, we were riding above the 10 simple support here, and when we did break down, we found support on the yellow 21 EMA. So we were creating a range right here, resistance, support. We broke down, we're finding support on the pink 200 simple. Okay, so in a strong trending move, the 10 simple will hold up price. The 21 EMA also will hold up. To maintain a bullish narrative, you want to be above the 200 simple or the 200 EMA. Below those, it is more bearish. Also, we can look at, so if you had Look, the 50 EMA crossed above this light green 200 EMA. When the 50 EMA crosses over the 200 EMA, that's a golden cross. If it crosses beneath, the 50 EMA crosses beneath the 200 EMA, that's a death cross. You can also have a golden cross and death cross on the simple moving averages as well. So that would be the 50 simple and the 200 simple. So if you wanted to look at that specifically, we could close out all of these and we'll put on the 50 and the 200 only. And you can see here is where we had the golden cross on the 200 simple. This could have been a fake out because we could see price did not bounce here. So, you know, sometimes just because you got a macro indicator like this, it doesn't mean everything. Possibly you wanted to counter trade it because we are all looking at the same indicators. So maybe people with big money, they knew all the retail would FOMO when they saw this golden cross and then they dumped it. Who knows? Psychology. This right here, 50 beneath the 200, that was your death cross, and we had a pump here. So the past death cross and golden cross have actually been contrarian signals, as you can see. But in previous years and previous price action, you can see this golden cross was pretty good. You had a major run up after it. This death cross was pretty significant as well. All right. So that's basically the EMAs and the MA settings that I use. And now we're going to move over to Bollinger Bands. To look at the Bollinger Bands, just type in Bollinger Bands. Okay, you can see that there. Click on that. Already have it loaded up. We'll go over to our settings on the Bollinger Bands. Nothing really you have to do. It's just make sure your length is 20. That's about it. And that's going to be a 20 simple moving average. Okay, so it's very similar to where you will see the 21 EMA moving average. So it's not uncommon for you to have typical or similar resistance and support levels when you go between the Bollinger Bands or the EMAs, MAs, because they're both basically using moving averages, okay? But the middle BB is going to be your 20 simple. And this is pretty simple. When you're in this area above the middle BB, you're in a bullish zone. When you're beneath it, you're in a bearish zone. You can use it as support, just like a moving average, and it can be also seen as resistance, like a moving average. So it's important if you're above or below the middle BB, and then you have the resistance band on the top and the support band on the bottom. If you close candles above the resistance band, the top Bollinger Band is pretty bullish, and it's often you will see a nice trending move when they ride above the Bollinger Bands or at the top. If it's a trending move to the downside, you'll see them closing beneath the bottom Bollinger Band, riding to the downside. Okay, so it's pretty straightforward like that. This move did close beneath the Bollinger Band. The next one did as well. Now it's fighting to get back in. If it makes an attempt back to the upside, you'll see the middle BB act as resistance. If you can regain the middle BB, you're going to see resistance on the top Bollinger Band. All right, that's the EMA, MAs, and the Bollinger Bands. Moving on to the next one.